Your thoughts? You think a rate hike is a given in October and more will come?
See, I believe that there could be a possibility of a 25 basis point in the repo rate hike in the forthcoming monetary policy, and possibly the decline in the MSF, which I believe that it could have been 50 basis points in the October 29 monetary policy, may now be delayed little further. So it could be actually a 25 basis point, and then after this FCNRB window is over, we can get onto that 100 basis point corridor. However, the most important point is that if you look at the data, I mean, primarily if I talk about the two numbers, the first is the core numbers, which has increased to 2.1% this month. There has been an increase, but I believe it's still not significant enough to suggest that there has been a significant pass-through of the purchasing of the corporates' purchasing power. There has been a marginal increase, but what worries me is now the rapid increase in the food prices. And here there is an interesting trend. If you actually look at the, I mean, there has been a lot of discussion about the agricultural growth this year, which could accelerate to now more than 5%, as a lot of people believe. The last time when we had an agricultural growth rate in 5.1%, that was in FY, not the last time, sorry, in FY06 when it was 5.1%, we had a food inflation which was very manageable, and I think it was below 5%. However, that trend of an higher agricultural output growth and a lower food inflation was broken from FY 2008 onwards, and in FY 2009, even after the agriculture and allied activities grew at 7.9%, we had an ugly food inflation number in excess of 15%. I think it was 15.6% to be more precise. So my worry is that even if we're logging a significantly good number on the agricultural front, the food prices may not abate in the coming months.
Okay,
here I would like to only make a small.
Yeah, no, Soumya, I just wanted to highlight that almost all asset classes have taken a beating. Rupee has gone to, I think, 61.3. Okay, that's the index itself for you. We were at 6115 before the numbers came in, and we have lost rapidly about 25 to 27 points on the Nifty after this number came in. And then pull up the rupee as well for you. The rupee was at 6116 or thereabouts, and we saw it suddenly fall all the way to 6130, and that's the bond market for you. Bond markets are seeing a fairly big jump. That's a 1.1% jump in yields. So clearly markets are pricing in more. Okay, Soumya, just to finish your point, what are you expecting by way of rate hikes? Only one in October, not more, you think?
See, right now I expect one in October, because I have an perception that if the one possible game changer in the prices could be the elections this year, because if you look at the last time trend, there was a rapid increase in food prices prior to the 2009 election, and that is declined rapidly also till March 2009. Then it went up. Then it witnessed a peak up. So from that point of view, that is the one consideration we need to take into account. Okay. Because if elections are held next year, there could be a possibility of food prices tapering off after December onwards.
Okay, Sajid. Okay, what are you penciling in by way of rate hikes now?
Lata, one rate hike, as we mentioned in October. Hard to tell after that. There are just too many moving pieces. To reach the fiscal deficit, you require a lot of fiscal compression over the next 6 months. That means growth is going to be even weaker than I think most people think. But it's interesting to see how the currency evolves as oil demand is introduced back in the market. I think the central bank will be data dependent, because you've got both these phenomena where retail inflation is high, but growth dynamics are still quite weak. So we're penciling in one rate hike for now, possibly one more rate hike somewhere in the first quarter of 2014 in the run-up to the election.
Okay.
But again, it will depend on how the data evolves between now and then.
Okay, Anant, yields, they have jumped up to 8.58, I think a 10 basis point increase in yields. What's your sense about what are they penciling in, and how will they move here on?
Look, Lata, I think the trajectory for WPI doesn't look too good now. In fact, we see it from a quick calculation going above 7%, particularly if the fuel price adjustment does go through, which the long-awaited fuel price adjustment. Of course, CPI should probably not follow suit. It should be, milder compared to the WPI move. Having said that, the headline inflation is likely to move up from here. So to that extent, I guess, and as Sajid mentioned, the reality is on the fiscal side, there will be several questions being asked. And I don't think it's the intention of the RBI to allow too much of bullishness in the bond yields in the longer end of the curve. So to that extent, I think the 10-year bond yields will be in the 8.5 to 8.75 range. It will be cautious going forward and looking at auctions. And a steep yield curve looks like being here for some time. We could see the RBI considering more rate hikes even after the October policy, particularly as data evolves. If there is issues on the fiscal side, if there are issues on the FX side, given the run-up to the elections, etc. So this could be a time for the RBI to build a war chest, and a slightly hawkish monetary policy could be a part of that.
Okay, absolutely flattened out for the markets from the day's high, but we haven't seen aggravated losses beyond that. So we're currently holding at around 1697 for the Nifty, and the mid caps are holding with gains of around 0.5%, but significant hardening coming into the 10-year at this point. Sajid, how worried would you now be about the CPI data this evening?
Not as worried for the following reason that, remember, food is a much larger component of CPI than the WPI. So to the extent that food prices month on month have not increased as sharply, actually bodes better for the CPI. If this was all driven by food, I'd be more concerned. The interesting part, as Soumya has been pointing out, is headline CPI and core CPI have been moving in opposite directions. And what you're seeing from today's numbers, over the last couple of months, some elements of pricing power on the wholesale side. The question is, does that translate into pricing power on the retail side? I think those are the open questions. I'll just make one more point. There's a lot of focus on rate hikes going forward, but remember, to the extent that the MSF is unwound, effective interbank borrowing rates actually go down over the next 3-4 months. So let's not forget that currently the operating rate is 9%, the overnight rate, that will probably come down to 7.75 or 8. So effectively, for banks at least, rates will go down, not up, over the next 3 months.
Okay, now we have the entire table. Manufactured products month on month had fallen in August. This time, month on month, they've risen by 0.67%. Within manufactured products, manufactured food products, which had again fallen 0.7% in August, have risen 1.37%. So actually, manufactured products have risen more sharply than core inflation. That's because manufactured food products have also gone up very sharply. But this might interest our economists. What has changed is base metals and alloys. There are two major chunks in manufactured products. One is chemicals, that has a 12% weight, and base metals and alloys, which has a 10% weight. The base metals has remained unchanged. It's about 0.25% higher month on month. But chemicals, which had remained flat in August, have risen by 0.75%. Given their weight, they obviously translate to a 3.26% rise year on year, and that is the big one feeding. I would assume that is a result of rupee depreciation, and therefore the ability of domestic manufacturers to price up slightly, or simply the higher cost of landed chemicals. Likewise, rubber and plastic products, which are clearly a product of crude prices multiplied by the dollar-rupee exchange rate, that also has gone up by 1%. Last time they were flat. So that's how it's stacking up. Clearly a manufactured-led inflation, as Sajid was at pains to point out. This cannot be brushed under the carpet as a food price inflation only. Food prices have gone up only by 0.8% month on month, compared to 5.3% year on year, month on month in August. So this